Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SKYWEST INC quarterly report. SKYWEST Inc. offers a diverse range of businesses and services through its subsidiaries. The company's primary operations include operating a regional airline in the United States, leasing regional jet aircraft and spare engines to third parties, providing on-demand charter services, offering airport customer services, ground handling services. These services are provided across various segments, including SKYWEST Airlines and SWC, as well as through its leasing division, SKYWEST Leasing. The SKYWEST Inc. SKYW stock price has experienced a wide range of fluctuations over the past year, with significant changes in value. However, there have been instances where news releases did not result in substantial changes to the stock price, exceeding 1.25% on that particular day. This can be attributed to several factors. One reason is the recurrence of routine announcements and analyst updates, which often lead to subdued market responses unless they contain unexpected or dramatic information. For example, SKYWEST Inc.'s quarterly results conference call dates were announced multiple times throughout the year without significant stock price changes. Additionally, some analyst ratings and price target revisions did not result in substantial stock price movements. TD Cowen's buy rating with a $120 price target in November 2024, and Goldman Sachs neutral rating with a $119 price target in November 2024 were examples of such instances. The lack of significant stock price changes can also be attributed to the fact that some days in October 2025 recorded daily movements of less than 1.25% without specific news releases. This suggests that market sentiment and expectations may have been stable during these periods, resulting in minimal impact on the stock price. Overall, the stability in SKYWEST Inc.'s stock price can be attributed to a combination of routine announcements, analyst updates, and stable market sentiment. Net income and profit margins. A shift towards growth. The financial performance of a company has shown significant improvement over the past period, with net income experiencing substantial growth. The net income increased by 30.1%, 29.8%, and 39.9% from $89.7 million to $116.4 million, $225.6 million to $337.2 million, and $506.6 million to $708.9 million, respectively. This upward trend is also reflected in the profit margins, which have seen an increase of 2.2 percentage points in operating income margin and 1.2 percentage points in net income margin. The improvement in profit margins can be attributed to a reduction in fuel expense and other operating expenses, indicating that the company has successfully managed its costs. The overall growth in net income and profit margins is a testament to the company's ability to adapt and improve its financial performance over time. The company is generating positive operating cash flow, indicating a healthy financial position. The data shows a significant increase in net cash provided by operating activities, rising by 39.9% from $506,565,000 in 2024 to $708,860,000 in 2025. This substantial growth suggests that the company's operations are generating sufficient cash to cover its expenses and investments, positioning it for future success. The company's debt level and interest expenses have undergone significant changes in recent years. A notable decrease in total long-term debt from $2.7 billion to $2.4 billion has been observed between December 31, 2024 and September 30, 2025. This reduction is also reflected in the decrease of $0.3 billion in debt level from September 30, 2024 to September 30, 2025. Furthermore, interest expenses have also decreased significantly. A notable drop of $6.543 million, minus 8.5%, in interest expense has been recorded between 2024 and 2025. This decrease is consistent with the reduction in debt level, indicating a positive trend for the company's financial health. Management's outlook on the company's strategy is centered around adapting to changing circumstances. They are evaluating new accounting guidance and adjusting their revenue recognition accordingly, particularly for flying agreements and service contracts. Additionally, they aim to increase commercial pilots by offering financing guarantees to reduce costs for third parties. In terms of growth, management notes a significant increase in fuel gallons purchased and revenue. However, they acknowledge that higher costs may not be fully offset through price increases under capacity purchase agreements. This suggests a cautious approach to managing expenses while driving revenue growth. The airline industry is constantly evolving, with companies making strategic decisions to expand or contract their operations. In recent developments, several acquisitions and divestitures have been made by SKYWEST. Acquisitions include the purchase of new aircraft from various airlines, including 7 E175 planes, 13 additional E175 planes for United, 16 E175 planes for Delta, 1 E175 plane for Alaska, and 29 used CRJ-550 planes for United. These additions are expected to enhance SKYWEST's fleet and services. On the other hand, divestitures involve the transfer of assets to another company. In this case, SKYWEST has provided assets to Contour Airlines, marking a strategic shift in its operations. The company's financial summary reveals that it has indeed engaged in share buybacks. Specifically, the company has a stock repurchase program and has repurchased 580,257 shares in 2025. Additionally, the company confirms its participation in share buybacks, with $240 million remaining availability under this program. That concludes the financial summary for SKYWEST INC. Feel free to comment below, and I will be happy to answer them when possible.